If you want to build a profitable trading business, whether that be through trading prop firms or your live personal account, on top of working a 9 to 5 job in a way that's sustainable and doesn't completely take over your life, but yet still earns you a solid second income and most importantly, just gives you a lot more freedom to do what you want, then you're going to want to watch this video because I'm going to be explaining exactly how you can do that, as well as some concrete proof that this actually works and isn't just some made up rubbish that only works in theory and not in practice. So in today's video, I'm going to be showing you guys exactly how you can build a second income from trading whilst working full time. And I'm going to be showing you the exact systems and strategy that I personally used and that my students have used to make over $10,000 from prop firms while also working full time in a way that minimizes chart time and ensures that you don't have to be staring at the charts all day long, which if you're in a full-time job obviously would not be possible. And if you guys stick around until the end of the video, I'm going to be showing you some concrete proof that this does actually work using a personal case study as well. So without further ado, let's jump over to the presentation and let's get right into the breakdown. So guys, let's strip it back to the very basics. So if you work a full-time job, chances are you don't have very much time to be trading. So what I have gone ahead and done, and this is the same system that worked for me when I did used to work full-time, is the fact that you need to plan out your day in advance, right? So we can't really be looking at the charts all day when we're working. So what we need to do is plan out everything in advance, use the correct timings, strategy, and then at the end of the video, I'll also show you some proof that this works. But for now, these are the three main things we need to focus on, right? So planning our day ahead, how we're going to mark up levels, and what sort of timing we're going to use to actually be trading, and exactly how we can go about doing this whilst working full time in a way that doesn't interfere with what you're doing at work. So jumping into the step one is to plan for the day. So how are we actually going to do this? So what I personally did is we will go back through price action at the previous night, right? So the previous night we'll spend around 30 minutes or so marking up the charts, marking on any key levels, marking on the higher time frame direction, so that when we wake up the following day, we know exactly the trades that we're looking for. We know the areas that we want to see price come into before executing on a trade, and also the sort of levels that we're looking for price to gravitate towards, right? And this is key when working full time because you're not going to have a lot of time to mark up the charts in the morning and do that really detailed analysis. This is why we do it the night before, so that going into the following day, we are fully prepared and know exactly what we're looking for. Now, what it is absolutely essential to do is know what your higher time frame bias and key levels are, because the chances are, right, the higher time frame overall bias and the overall higher time frame trend is probably not going to change by the time you wake up the following morning. So if we know that higher time frame bias, let's say price is bullish, we know that the following day we're only going to be looking for buying positions, and that the chance that that higher time frame trend just suddenly comes to an end overnight is very little. So we don't really need to change anything. We already know from the day before what we're kind of looking at, and some key levels as well. So the night before, what I used to do is mark on any areas of supply and demand on the higher time frame that I thought price may pull back into, as well as any liquidity levels that I was looking for price to take out. And then I would simply have these marked on the chart so that I can react to them if price comes into them, and I don't really need to spend too much time doing a detailed analysis on the lower time frames or even on the higher time frames of what price is likely to do, because I already knew so from the night before. And this is just going to give me a lot more mental clarity and is going to mean I don't have to really spend too much energy thinking about it the following day, because I already know what I'm looking at essentially, right? Now, this also ensures that you're staying consistent without trading interfering with your workday, because you don't have to mark up the charts while you're at work, where, you know, like something sometimes may happen where something takes you out of your routine and you don't have that time to look at the charts whatsoever one particular day. But if you've done this the night before, then you're always ensuring that you are sticking with that consistent approach of marking the charts the night before in a way that's not going to interfere with your work. And you don't have to do this, you know, when you're on the move and you're not going to be as mentally focused on the charts, right? Now, moving on to the next step is just to stay on top of the charts. I've mentioned this before, but I'm going to say it again because this is really, really important. So how we're actually going to minimize chart time is by simply setting alerts. So on TradingView, you guys know you can set alerts at particular price levels, and this is going to be the real key to trading with a full-time job, and is essentially what allowed me to do so successfully when I used to work a 9-to-5 job as well, is simply just setting alerts. This is going to mean that you don't have to stare at the charts, because you know when this area is hit, which again, you know from the night before when you marked up your charts, you know that once this area is hit, you're going to get a notification on your phone, so you don't have to look at the charts until that happens, right? So setting alerts at these higher time frame key levels is the key. And in the next slide, I'm also going to go through the exact strategy as well, so make sure to stay tuned for that. For now, setting alerts is key. Set them at those higher time frame key levels that we went through before, and then just simply wait for the price to come into them, and that way you don't have to look at the charts all day, right? So as I've said here, only look at the charts when price comes into these areas, because that way you don't have to stare at the charts for any extended periods of time, and you can just simply wait for those alerts to get hit. You also want to set another alert once price is in your higher time frame point of interest. And what I mean by this is going to become a lot clearer when we go through the strategy itself. But essentially for the strategy, once price comes into the higher time frame point of interest, rather than just buying or selling blindly, we want to wait for price to reach this area and then give us that confirmation on the lower time frame that area is actually going to hold, right? We don't want to just buy or sell from it. We want to wait for price to show us that the area wants to hold, and we're going to do this using some of the lower time frames. Now, in order for us to use the lower time frames for this entry criteria, what we're essentially waiting for is for the lower time frame to flip back in line with the higher time frame. So let's say if we bring up TradingView, for example, so let's imagine price is bullish on the higher time frame, right? So price is moving like this, and then it starts to pull back. Let's say you have a higher time frame point of interest marked here. So the first thing we would have done is set an alert at this area using the horizontal line tool. We would have clicked here, clicked less than, and then we would simply be waiting for this alert to get tagged in. Now, once price comes into this area, we don't want to just blindly buy from it. We want to wait for the lower time frame to flip back bullish in line with that higher time frame. Because if you guys just imagine this scenario, when price is pulling back into this zone, it's going to be presenting this bearish structure on the lower time frame. So once that area gets hit, what we're essentially going to do here, and the way we don't have to stare at the charts and monitor for an entry, is we're simply going to set an alert at the most recent lower high in this downtrending structure, wait for price to break it, and then and only then we are going to look at the charts, and we simply set a limit in a discount, and then we're looking to buy up towards the previous high. But the point being here, and the way that this actually works while working full time, is the fact that you only look at the charts when these alerts are hit. So you initially set the limit, that you set the alert at this higher time frame demand, and then once that alert is hit, you then set another one at the downtrending structure for your confirmation. That way you don't have to sit there and look at the charts, right? So that is essentially what we are doing here, and that is all you guys essentially need to be doing, and this is all you really need to know for this strategy, right? And once the alert is triggered, either we enter or we don't. The good part about this strategy as well is that we are using limit orders, so pending limit orders. We don't need to be market executing, which is obviously when you're working a 9-to-5 job, this is going to lead to rush trades. You're going to be quite stressed and anxious when you're entering because you're trying to rush, put in the correct lot size, put in the stop loss and all of this. But if you use pending limit orders, you know, price is going to take probably at least 5 minutes for you to get tagged in anyway. So you have some time to do that, which means you're not rushing, you're less likely to make mistakes, and you can do so with enough time. And this brings us over to the actual strategy itself, right? I have also included the full trading plan to accompany this in the description below, which you guys can go and download for free if you want. But if we get over to that now, the strategy itself is tailored to work with both a 9-to-5 job and for those that don't have a job and are trading full time. So it can be applied in either case, and as I'll show you in the end of this video, it is possible if you are working full time as well, because one of my students used this exact strategy to capitalize on over 5 figures worth of payouts in prop firm payouts, right? So step one of the strategy is to identify the higher time frame structure and direction on daily and 4 hour. And we are only looking to take trades in line with this direction for the highest probability setups. So if you recall from the presentation, we said we're going to set alerts. So what we're essentially doing is once we have that higher time frame direction, we don't really need to reanalyze the charts because we know from the night before what the higher time frame is doing, right? So we're simply identifying higher time frame structure and direction. If price is bullish, we're only looking to buy, for example. And then we're just jumping over to the 4 hour and 1 hour to identify more refined structure, because, for example, if you're on the daily, a lot of that is not always clear. So we just go down to identify that more refined structure and draw on any areas of previous mitigations. So just to give you an idea of what this actually means, right? For example, Euro USD at the moment, what I would be doing here the night before, so the night before that I start work in the morning, I would be drawing on the daily structure, right, and seeing that price is overall bullish. So obviously by the time I wake up the following morning, it is very, very unlikely that this bullish trend would have just completely reversed and flipped bearish. So I know from the night before that I'm only looking for buys, and this is very helpful in terms of not needing to reanalyze the charts in the morning. So I'll mark on this key structure. You can see here we have change of character, and then the B stands for breaker structure. And I've just gone ahead and marked on these key structure points, so the key higher highs and higher lows in this trend. And then I would also break it down to the 4 hour and 1 hour. In this case, the structure is pretty much the same, so there's not too much to do there. And for example, what I would do next, and this is step 2 of the trading plan, is to identify any areas of interest, right? So areas that you think price may come into, and areas where you'd be willing to enter that buy position if price did come into it. So for example, if we head back over to the charts, what I would be waiting for here, you can obviously see this very clear momentum that price is carrying. So we may not see a bigger pullback, but at the moment, what I would be waiting for is maybe a pullback into this sort of demand region down here. So with a full-time job, I would simply set my alert at this level like this, click less than, and then I would very simply be waiting for price to retrace into it. And once price does come into it, then we can move on to the next step, which again, I'll go through in a moment. But the point is, the night before, I would be marking on some of these key levels that I think price may pull back into, and then simply setting alerts at them so that I don't need to reanalyze price in the morning or spend any extended periods of time looking at the charts, okay? So I have a few different criteria for the point of interest itself. It's simply an area of supply or demand in the current trend leg. So in this case, the current trend leg being between the low and the high. And obviously that's a pretty big range in this case, but because of the momentum, we can also sort of take that into consideration and basically infer that price is very unlikely gonna, completely pull back all the way down here. So we can look at some of those nearer term levels instead, okay? So that's the first criteria. Next, we also need to see price create imbalance, which in this case, we obviously very clearly have. And there needs to be some form of liquidity above the demand zone. And this is simply just because if there is liquidity above the demand or below the supply zone, it makes the trade higher probability because we know that price is very likely going to react from it once it's taken out. Okay, so next step is going to be those lower time frame confirmation entries that I talked about. And this is very simply when, like I showed you guys earlier, let's imagine this scenario. So price is pulling back towards the area of demand that we've marked on. Once price is pulling back into this demand zone on the lower time frame, in this case, we're going to be using the M5 time frame for our entries. This is going to look like a bearish trend on the M5. So all we're waiting for is once price comes into this demand zone, we're waiting for price to break and close above the most recent lower high just to the left here. And again, once price is in this higher time frame demand zone, all we simply need to do, and this is what's going to allow us to ultimately minimize chart time, we're just simply going to set an alert at this lower high. So we're going to set an alert for greater than, and then once price breaks this alert, that is the only case where we need to look at the charts again, which obviously is going to allow us to minimize that chart time. And then once this alert is triggered and price closes above the higher low, we look to see if the entry is valid. So in this case, what actually validates the entry is if price creates an area of imbalance. If it does, we can wait for a pullback into a discount, and then we simply set a pending order at this level, and we look to buy up and target a mechanical 1 to 3. Now, this is also a key point as well. So with a 9 to 5 job, obviously you can't be looking at the charts, managing the trade, making break even, taking partials, trading stop losses, and all of this sort of thing. So what I have done is tailored this strategy to that, or with that in mind. And what I simply do is use a mechanical 1 to 3 risk to reward. So what this means is when I'm triggered into the trade, I simply move the risk to reward tool to a 1 to 3. I don't make break even, I don't take partials, I simply let the trade run to stop loss or take profit. So using a sort of set and forget approach, meaning that you don't have to look at the charts again once you are already in that trade. And I have tested this, and according to the data, this is more profitable than taking partials, making break even, and is completely optimized for the most profit possible. I've tested this over 3 years on every pair that I trade, so UJ, Euro USD, Gold, and GU. And in all cases, this is actually more profitable than actively managing the trade as well. So based on the data, this is also the best thing to do anyway. And it obviously aligns very nicely if you guys do trade full time, because you can just simply set and forget the trade. I also find this is a lot better for people's psychology, because it means they don't have any uncertainty in where they're targeting. They know exactly where they're going to be targeting, and they also know exactly when they're going to be exiting. Taking partials, making break even, and all of that sort of thing just gives you a lot more mental clarity, because you know exactly what you're going to be doing. So that is essentially everything involved in the trading plan. I do have a few other points included in the trading plan, including how I would manage risk with prop firms, personal capital, multiple prop firms, the difference between challenges and live accounts, and also some of the key processes which I implement, such as trade journaling, key process for tracking data, and also something called ASR, which if you guys want to check out in the description below. As I said, this trading plan will be downloadable completely for free if you check it out in the description below. But if we go back over to the next step now, what I wanted to show you guys before we end the video is that, is this actually possible, right? Do people actually do this, and do people actually make money from trading whilst also working full time? And the answer to that would be yes. So this is one of my VIP students, Billy, who joined around 3 months ago now. And since then, he has managed to pass both phase 1 and phase 2 of a 70k pound 5%ers challenge with the 5%ers prop firm. And real quick, just a little bit of context about who he actually is. He is 19 and works full-time in recruitment consultancy. So for anyone unfamiliar, recruitment consultancy is basically involving you phoning up people and trying to get people hired for a particular company. So it involves a lot of time on the phone, which obviously when you're on the phone talking to people and doing these sales calls, you're not able to actively monitor the charts. But yeah, Billy has still managed to pass both phases of that challenge, and also had multiple 4-figure payouts totaling in excess of around $10,000 net profit from this one prop firm account. And he doesn't use higher time frame, he doesn't swing trade or anything like that. He actually executes most of his trades on the 5-minute or the 1-minute time frames, so very low time frame, and yet he still manages to do this with that full-time job where he's not really able to spend a lot of time on the charts. So as I said here, he has managed to secure multiple 4-figure payouts in under 2 months, and he did this simply following the strategy that I just went through in this presentation, right? He uses the exact same strategy as me. He hasn't tailored this to himself or anything like that. he just follows the exact same system and uses the higher time frame zones, sets alerts at them, and then once price comes into those zones, just simply sets some more alerts at the lower time frame structure points, waiting for that confirmation, which I went through a minute ago. And after that, just simply sets a pending order, sets and forgets the trade, targets are 1 to 3 or those previous structure levels. And it's as simple as that, just a set and forget approach using alerts at those levels and then only looking at the charts once those levels are hit. So guys, I just wanted to go through that real quick just because I wanted to show you that it is actually doable, but only if you do put the work in. So Billy joined us only around 2 months ago now and has passed, like I said, both phase 1 and phase 2 and got those 4-figure payouts, 2 of them now I believe as well. And like I said here, he's not completely different from any of you guys. He doesn't have a 200 plus IQ or anything like that. He simply learnt the system, applied it, back tested it, and then made money from it. And that's literally all there is to it. So thank you all guys for watching this video. If you did enjoy this video, make sure to comment below, like and subscribe for more, and I will see you guys in the next video.